Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to the Good Friday edition of How to Make Money Trading Stocks. We're really looking forward to, I hope everybody has a good Friday. And I applaud you guys, the folks who are joining, because we may be a little bit light today, but I want to welcome everybody here that's here live, and also the folks who will be joining us on the recording of this. It will be up sometime this afternoon. I want to remind everybody that what we do at Active Trend Trading, we do a lot of training and showing what we're seeing from a technical perspective, and that all materials that we do present are for training purposes only, and traders should always paper trade any new method prior to the risk of their own capital. If you need somebody to give a presentation on technical analysis and or some of the other canned presentations that I prepared for IBD groups and also just trend trading groups, I would be glad to talk with your group, and just shoot me an email at the email down below. And if you're in the Bay Area, I can come and do one live, and if you're long distance, we can set up a webinar. I've done some for Florida, down in Southern California, also Denver, and I just thanks everybody for the chance to do that in Delaware. It's so wonderful to be able to communicate long distance, and I want to welcome everybody who's here. You know, the Active Trend Traders, when we do these webinars, we cover, we have folks all the way from India to Ireland joining us. And so I like to welcome everybody, who trades internationally, because I know with the time constraints, trying to trade the American markets at least, that can be a challenge, or sometimes can be a blessing. I know when I was in Germany, I liked trading the market because it was, the market would close about 10 o'clock in the morning there, and open up in the evening, so it was really easy to do the planning. So if you would like a presentation, let me know. Be glad to chat with your group. So this week in the market, we had a weak rally that resulted in us springing up to a lower high. And on the S&P, as you can see, rally attempt and fall. Will this April be like last year? And that's one of the questions that I'm kind of pondering over this weekend. And then the NASDAQ between 50 and, it's currently sitting between the 50 and the 100-day moving average. And so my question is, look out below. NASDAQ's acting a lot weaker than the other markets, the other indices. And so Bruce lets us know that a couple of things. One is Kramer speaking, his wisdom basically was saying he does not trust the market. Is it time to run? ? And Bruce, yeah, the job. He mentions the job reports missed their mark. We'll talk about that in just a little bit, because those of us who, the active trend traders who do the specialty trades with options, we could be rewarded very nicely on Monday. With a real nice downtick, because we bought into the May puts about the 208 level. So Russell is continuing to hold up better than the other indices, but, and the reason I put a but there is that when the Russell tends to let loose to the downside and also the upside, it does it with much more violence and volatility. And you can get some really great moves in both directions with the Russell. Outside influences, global conflicts continue to be an issue. And then the interest rate questions. Any hint that the Fed is going to continue to look towards June to raise the interest rates will be a catalyst to drive the Russell down for sure, because the small caps like the lower interest rates. And then we have Q1 earning concerns, and similar to what we said last week, we're in the 6th year of a bull. Concerns, as we saw with the earnings report, are the jobs report today. Slowing U.S. economy. how much of that is. I recognize that over the last 6 years, the government's done a good job of trying to make the U.S. non-important on the world stage, but from an economic standpoint, we are still, one of the largest economies in the world. And then I want to show you guys a chart of the Chinese bubble that may be setting up, and that'll be a setup for Mike Traeger, who isn't with us today because Mike is picking up his wife from the airport in Dallas. She's just arriving back from a business trip over to London. But I want to show a really interesting chart, and we'll have a little bit of discussion on that. So taking a look at the percentage of stocks on the NYSE above their 20-day moving average, as we see, we had a nice little bounce up early in the week, drop, bounce back up, but look what's coming into play again is basically we are getting certainly this negative divergence, and this was actually setting up a lower high on the indices. And so what do we have going on here? We kind of have a quasi, squeeze, if you will, where the volatility may, continue to, when these things squeeze together like it's doing here, we see a definite increase in the volatility. And so that's what we may be looking at. Again, several years ago, this particular indicator started wrong pencil. This started fluctuating just in this area, and all it would do is just up and down, up and down, up and down. Very challenging, sustainable trading period, and so we had to switch to basically a short term. You hold it for 2 or 3 days, you're out. You hold it for 2 or 3 days, you're out. All right, and then sometimes we could reverse and trade back to the downside, but again, you held 2 or 3 days and out, which can be challenging for some folks depending on their availability with the market. I want to show you something I've been watching that looks kind of interesting. If you are a candlestick aficionado, on barchart.com, where we get this indicator, you can put it in there where you can look at the price actions on a daily basis or a weekly basis and utilize candlesticks. And one of the things I was noticing with every one of these tops, you started getting some bearish candlesticks. And as we see here, shooting star type followed by a bearish engulfing. Up here, a doji, hanging man, and then finally we fell to the downside. And as it turns out, and we'll be presenting more of this for the early warning alerts and the active trend traders, is that each one of these turned out to be an excellent opportunity to pick up a little, some trades down to the downside. But I just wanted to share that with everybody to say, wow, look at that. Those are bearish candles. Same thing down here on when we hit the lows. What we get here, a bullish engulfing, inverted hammer followed by a really nice move up, and over here, bullish engulfing here. Back in this is the October time frame that led to that really big run in October. But a inverted hammer followed by a bullish engulfing. Then we get a retest, and away we went. And so the question comes in is would a close above those channels on this indicator mean an uptrend? Typically not, Dorothy. Typically, if we get outside this channel, it may mean that we're oftentimes looking when it gets over here in the extended level. That's when the prices on the indices are extended, and we're anticipating a pullback. When they drop down into this area, and as we saw back here in October, it dropped all the way down to below 15, which is a very weak reading, but then it did a strong rebound. When the market was in correction several years ago, these numbers actually got down into the single digits down here, and it set up its own pattern. And so good question, Dorothy. So I wanted to share that with everybody. So let's go to the charts and take a look at them and see what the markets are doing. One of the things I started with today, and we don't usually start with the futures, but this is the E-minis for the S&P 500. Here was yesterday's close, basically, and it runs till late in the evening and then opens back up first thing early in the morning the next day. And what we see here was our close yesterday, just above the 100-day moving average. The jobs report come out this morning, and it gets slammed all the way down to the support at about 2040-ish. Well, what does this mean to you? I'll be busily watching the futures going into into Monday morning, because if in fact this remains slammed like this, and we open up down here at the 2040 level, what we could get is just a real quick rebound. But even the futures are starting to roll over and look more bearish. We're starting to see this also up in this area, and I'll get to the index itself. But yeah, if the market would have been open today, those who were involved in that put trade would have been sitting there going, I'm really glad I did that put trade, because it would have jumped the value of the put would have jumped about $1.50 to $2, and we could have taken off some of our profits. So we'll see what transpires, because oftentimes just because this is down right now, Sunday at about 2 to 3 o'clock in the afternoon Pacific time, the futures will start ticking off for Monday, and we'll get a new indication of, okay, where's this going to go? And it may, by Monday morning, it may already be all the way back up here as people digest what's going on. So I just wanted to share that with you, that I'll be keeping my fingers crossed that the futures stay the way they are. Okay, come on. There we go. So let's take a look at the S&P. The S&P, basically last week, here's Friday or Thursday. On Monday, we had a really big launch up, but then a one-day reversal, bearish harami, followed by a bounce off the 100-day moving average. But as you can see, this downward, each one of these downward plunges is hammering the 100-day moving average over. And now the S&P has closed below the 50 again. So it spent one day above it, feigning this breakout. Breakout fails, and we move right back down. And for those who are really quick, this could have been a really interesting little short-term trade, but you had to be really fast to be able to pick it up. One of the things I want to highlight over here on the weekly charts is, as we see, the tone of the market started to change around September, October of last year. You get this first really huge pullback back below this is the equivalent to the 200-day moving average, and it's the 40-week moving average. Big move down, immediately reversal the next week, and goes into a real nice run. This was at October, mid part of October low, but then we ran up to a new high, and then all of a sudden the market's going nowhere. The market's going nowhere. You take a look back in time over the last few years, this is a different appearing type of price action on the market, which is telling us that, okay, either one, we're making a pause and we're going to just run sideways for a little bit, or we could be rolling over. Now is the time to start drawing in your determining how far, okay, like if we get back down to 2040, that would be only a 3.78% correction. Now, what happens if we get down to the next level of support? Now we're at 6.43. And whenever we get a turnover like this, I always start projecting out where's my 5% correction, where's my 10% correction, and possibly my 15% correction. So I'll have an idea of those are areas where you would anticipate a potential stop in the downward momentum and a reversal back to the other side. In honor of Mike, since he's not here today, I'm going to take a real quick look at these are my weekly on the left and a there we go, and a monthly chart on the right of the S&P. And as we can see, yeah, this S&P uptrend has been going on since, somewhere 2011, or some people started back here in 2009. So we've been going on for about 6 years now. And the last few months after we had this hanging man, which was voided because we moved above it, the price action has basically slowed dramatically and has just basically gone sideways. If we get a break and a close below the, let's say, the 2037, 2040 area, then we could be continuing to bend this over, so we may revisit at least down to approximately the 1924 level. And so this is where taking a look at the longer term charts can start to give us some additional clues on how, what's different, what's going on differently in the market today. Take a look at the NASDAQ. And I'll switch back to the other chart. NASDAQ, even more defined how we're getting a change of what appears to be a change of personality on the market. Instead of moving so much this way, because in the past we'd get this nice rebound, go for a run. Nice rebound, go for a run. Here we get the rebound, but the run was muted. So it is weaker than the S&P. We broke this low last week, actually, came back down and retested it, but Thursday, as you can see, I recognize it's a pre-holiday Thursday, but we get a very muted response, even though this could be considered a bearish harami, or correction, a bullish harami. We'll see what the futures show us as we look to open up on Monday morning, because the futures on the NASDAQ, for the NASDAQ 100, were down in this area. I think that they were actually down below the 100-day moving average. So it appears as if the complexion of the market may be changing. If we do break that level, you can basically just take an extension from here to here, drop it down, and I'll tell you an estimation of a downside target. Or we can just go as we did previously and say, okay, right now this level here would be, that's about a little bit over 4% correction down to the 100. If we moved on down to where the 200 will be in a couple of weeks, that would be about 7.63, which it just turns out is right kind of in the middle of this support zone defined by this last range. So I'm not saying I'm not. It just seems like I said, it seems like the complexion and the personality of the markets may be changing. The Russell. The Russell, again, acted much more strongly than the other markets. It did, once we rebounded back above the 20-day, while we had some intraday penetrations, we did not get a close back below the 8. However, the sellers did start coming in at the 1260 level on Thursday. And so if we break back down, well, what we'll see happening is we'll continue to hammer on this 50 until it starts to roll, until it starts to bend over, and the trajectory, once the trajectory changes, it could show us that, hey, longer term, we may be in for a little bit of a correction. Again, same thing here. We're getting these. This is a bearish Harami, followed by another bearish Harami, and we still have not closed below the 8-week moving average, the equivalent to the 50-day moving average. But it has slowed down some. We get an initial thrust up, and if the other two markets indices continue to weaken, the Russell won't hold up forever, and when it does go, it tends to retreat very, very, very rapidly, and that's what I'm saying. It's a lot more volatile. And as we can see, last year's action on the Russell, it really didn't do a lot. There were some great tradable opportunities in it, but as far as getting to the first of the year to the end of the year, it was very limited. Do you see, here's another question from Dorothy, do you see a 10% correction in the works in any market? Isn't that what's needed to get a new bull market? Dorothy, that's a really great question. A lot of people are saying, looking for or wanting a correction that's larger than 10% to really launch into a new longer-term bull market. To get the froth, get the overvaluation out of the market, so that it would be like starting on a new foundation. Do I see a 10% correction? I'm kind of like Mike on this one. I know one is due, but we just don't know exactly when it's going to happen. We'll know perfectly once it does happen, because we'll be able to see that by 2020 hindsight. And what I'm seeing right now is just, it seems as if, especially on the NASDAQ, the NASDAQ 100, the NASDAQ Composite, and the S&P, it appears as if the complexion or the personality of the market is changing. Now, it could just go sideways, but as we get closer to June, and if the Fed maintains its stance that it wants to increase interest rates in June, and the economy continues to soften, we could be looking at something that would be a catalyst to potentially drive us down. Could be, but we just have to hang in there with the charts and see what happens. So if the Russell, basically stalls out here and starts to fall, this would be counted as a lower high, and the projection would be, down past the 1242 back to this previous low here. Now, I was going to show you one other thing. I believe it was on the NASDAQ or the comp. I hope I have that chart in there. Oh, okay. Just another little thing that's going on here is we can start connecting these lows here, and that starts giving us some additional information of where potentially this could drop to and then get a bounce, and that would be basically due to a downward sloping channel. I think that may show up a little bit better on the NASDAQ Composite. Yeah, just a little bit better on the NASDAQ Composite, where it made a new high. And so a breakdown here below the 50, this would be an ideal place for it to potentially bounce, because it could be the start of a new downtrending channel. We'll see. And it's interesting to see how by the time, it doesn't go directly down to it, but let's say over a couple of a week or a couple of weeks, it would break down to the lower part of the channel. Well, look what's coming up there to meet it, the 100-day moving average at a range of about 4,800. Okay, that kind of covers us with the market. Here is the Shanghai Composite. This is the Chinese Stock Exchange. And one of the things Mike and I were discussing this past week as he was preparing an article for this week's Traders Report is this chart looks a lot very similar to what the U.S. stock market looked like back in the 1999 and going into 2000, where we had just gone kind of hyperbolic in our extension. And what's interesting is Mike shared with us the other night on the Wednesday night talk is that, cab drivers, college students are people are selling property to be able to invest in the Shanghai Composite because it's been on such a hot tear. Those are the initial signs that we may be reaching, a bubble, if you will. And it may not, because you take a look at the NASDAQ or either one, the NASDAQ 100 or the NASDAQ Composite. Take a look at it back from about 1997 through about 2001, and just look at the trajectory that index went on. And everybody, and a lot of the same type of verbiage that was coming out of the U.S., people who were investing in the U.S. market back in the 1999-2000 timeframe, that we don't need evaluations, we don't need, fundamentals don't mean anything. Eventually, at some point, fundamentals do come into play and mean something. Let's say that the Shanghai index is going into a bubble top, and if it were to burst, what would that do to the U.S. market? Because since we are such a global economy these days, if the Chinese economy, if it did blow up, and people started losing all their money that they invested, that they had selling real estate to invest in the stock market, or barbers and cab drivers out there picking stocks, which is oftentimes a sign of that we're getting close to a top. If this blows off, where might the U.S. economy, what will be the ripple effect to the United States market? But I thought this was, again, go back and take a look at the 2000, leading up to the 2000 drop. Some of our recent picks, Habit, we tightened up our stops on Habit. It's up about 5.7%, and we want to protect that gain as much as possible. I still like Habit long term, but it may be if the market does continue to soften, this certainly will also. We entered the Spider downside trade on an option trade on Friday, and again, if the market were to open where it is currently painting the prices for the futures, we would be very happy on Monday morning. We'll see how happy we are once Monday morning actually gets there. Hey, watch the highlight stocks in the daily updates and in the weekend traders report. That's where over the past, since the beginning of the year, we've been highlighting some really great stocks. And I know some of the folks have been able to apply and get into some of those and have been very pleased with the returns. For the majority of people I see here on the line, you are very familiar with the active trend trading system. We are continuously working on, small refinements to make that, better, and also to make our notification process better and more timely. And I think we've done a good job of that so far this year with the text alerts and getting things out to people earlier. I'm in the process this week of primarily, once I do my full review of my watch lists, failing patterns. This is Cyber, CYBR. And as we started to see last week, Cyber gave a wonderful buying opportunity down either off the 50-day moving average, and it started to move back up. Looked like it was going to do a breakout of 55, which, however, then it started getting weak. It started stalling, and Friday we get basically the breakout from the pullback. This pullback is failing. So what does this mean to us going into next week? Potentially a retest back at 50, or this would be compared to this over here, this would be a lower high, depending on which of the shorter term trends you look at. So if we get back and retest back at the 50, because that's still upsloping, that might provide some opportunities, or take a look at that on a weekly chart and give you a totally different perspective. But what I'm finding is, the good news is some great stocks will be providing a lower entry action point unless the market goes totally ballistic to the downside. We will know a major shift in market sentiment is underway when, because we've been basically living off this buy the dips, is when the buy the dips starts to fail. And when those start to fail on a larger scale, and we're starting to see some failures, such as like Alaska Air, made a really good attempt to break up and move higher, but it did a nice failure. And then some of the other stocks that have been doing the same thing. Trying to think of a couple that that fit that category, but I know Alaska Air is one of them. AFSI may be doing the same kind of thing. So anyway, for this week, I'm highlighting some downside opportunities. Keep an eye on Tesla, GILD, CLG, Baidu, Bita, Cyber, and Juno to the downside. Juno is a really classic. Take a look at that one. Really strong breakout that turned around and has now reversed down. Now, that's market related, and so look for when it finds its stability. Upside opportunities. Of all of these, I really like these two, but again, it'll be market driven. And so, and then some of the simplified upside and downside potential trades are trading either shorting the IWM and the S&P, the Qs. I like IWM and S&P, the SPY, the spiders, more than I like the Qs because they have a little bit more range. And so if a person is an option trader, it gives them some better potential. Here is another one that has some potential, but it's the volatility in the VIX. It's the VIX ETF. It's got a great option profile, and it is at new lows. And so if the market is going to be reversing, that can provide some very, very quick profitability. One thing I find with traders is that we all have to do is we have to determine is it okay to gain profits on something like the VIX, which is not it's not an ETF that's tied to any value. It's just tied to the regular VIX on the S&P. But as a trading vehicle, it can offer some really excellent opportunities. The other items is IWM, spiders, and the Qs oftentimes have a better option profile. And so if somebody is going to be, they say, hey, I want to learn how to trade options. Well, look here first, because they usually have a very small spread, and the cost of the at to slightly in the money options that are out, let's say 4 to 6 weeks or 4 to 8 weeks, is usually reasonable. So this is a great place to learn how to trade options without jumping into, trading options on individual stocks, which leaves you open to the unknowns that go along with that stock. So I think, Dan, I'm going to answer your question. And so, firstly, I want to we went to a study last night, and there were some terms in it that just really got me. And investing and trading wisely, and I applaud you guys. Here we are on the pre-holiday Friday. The market is not open, and you decided to join in and make an investment in yourself. And so the speaker last night, he says there is a cumulative value to investing small amounts of time in certain activities over a long period. And those are the important things in life that we should be doing, the things that we shouldn't be neglecting. And he said, but neglect is cumulative as well. And what brought this to my attention is on Facebook, they sent me a photo that I had posted like 5 years ago. And I looked at that photo and I went, oh my gosh, I was in a lot better shape than I am now 5 years ago. What have I been neglecting? So I've had this guilt thing going on of I need to get my workouts back going and that kind of stuff. And that there is no cumulative value to the random things we opt for over the important things. And so that was telling me to say, be more on purpose. So Dan has a question. Could you go over your thoughts regarding the decision to pull the trigger on the Spider put entry yesterday? Yeah, Dan, I sure can. I will get up a Spider chart here shortly and go over that. Just want to remind everybody, I'll see you guys next week. Mike will be back with us, and then have a great Easter weekend. And as always, trade wisely, trade profitably. So that'll close that part of our presentation down, and let's go take a look at the spiders to answer Dan's question. Okay, Dan, part of the deal was on entering this, and I got to take a look at this. I need a longer-term chart here. Where's my T? I think that's what I'm looking for. First of all, we were basically making, it appears as if the complexion of the market is changing. And so we had closed down here below the 50, and after making a lower high, which told me that this market was weakening. And so as prices on Thursdays pushed back up to the 8-day moving average, I was sitting there, I was looking at that on the intraday chart, which is the hourly intraday that I'm looking for. And so anytime if I'm contemplating either a long or a short position, I'm looking over here at the intraday also. And around this time period, what was happening? Stochastics had already peaked, and I know by observing the stochastics that on the intraday 1 hour chart is when they tend to get up in their oversold condition and roll over. That's a good time to look at going into a short position. It had bounced up first thing in the morning, failed to push through the 50 period on the intraday, which is equivalent to approximately the 8-day moving average on the daily. And so I said, okay, if I get a failure here back below the 20, that was my thought on, that's where I want to plan my entry. And as we can see, the market tried to come back. The market tried to come back later in the day, but it got right back up in that same area of resistance and failed. So that was my thoughts and the rationale behind. And so Chelsea asked a really good question. Why not just sell the call? Well, I can't sell a call in like an IRA because I would be naked that call. People can set up to sell puts in IRAs, but most companies don't, most brokers don't allow you to sell calls on IRAs. Now, you could have set up a downside spread trade, but I'm not going into the more exotic types options. I want to keep it straight and simple. Got it. Okay, cool. So, Dan, did I answer your question? Yeah. I like the hourly. Dan says that he watches the minute chart, not the hourly, and needs to pay more attention to the hourly. What I find is that I want to give give things time to cook off, and so what I found more inducive to trend and or swing trading is using the hourly chart rather than the shorter term charts. I will occasionally drop to a 30-minute chart, but very, very, very seldom. Because the signals on the hourly chart and 2-hour charts tend to be more reliable. And I've found utilizing this yellow line here that you see here, which equates to the 8-day moving average, pretty well. Because as you can see, it finished at 206.83, and the 8 period here finished at, or the 8-day moving average finished at 206.81, and I find that just is right on, and so that can be my line of demarcation for doing my option trades, and also my swing trades for getting in and out of potential stocks. So awesome, great questions, folks. So, well, we got about. We can knock off whenever you want to, or if you have some stocks to look at. Yeah, Gino comes in with a boatload. Way to go, Gino. Hey, I got a couple in front of you here, and so we'll go to the USO. USO started to make a real nice rebound. It's got support down here below 15, and right now, if the momentum continues to come into this ETF, then clearly, and we get a punch back up above this high, but it's got some nice tradability. I think the index that are the 3 times leveraged index for the USO that Mike introduced us to last week. Let me get what that is. The UCO also has some potential, but which is showing similar type of response, and it does a huge level of has great volume. Let me add my volume back in down here. No, Dan, you asked a question about the spiders again. No, there was no specific candle action per se, other than reaching up, touching, and failing at the 8-day moving average. That was giving us an indication that that's where the sellers were coming in. And again, we will see Monday morning, because between now and Monday morning, a lot of good things. Maybe a lot of people will be happy with the deal that has been struck with Iran on the nuclear issue. I don't know. But, hey, UCO, again, similar, a little bit lower cost, but it's painting a very similar type picture as the USO. Kihu. I'm liking Kihu if it will continue to prove itself, in that we have now got this nice little cup down here. Yes, we can have cups at the bottom as well as cups at the top. And it may be in the early part of finally putting in the final base before moving higher. As we can see, it has hit the 50-day moving average and is hammering it back up. It has not closed back above that yet, which gives us an indication that it's going back into a more positive run, but it is holding up well. This was the market sell-off on Thursday or on Wednesday. As you can see, Q just barely moved. And so if we continue to get this constructive action, and this day here turns out to be a swing low, then we could get some new projections moving up. We now have, no, I don't want that, I want this. We now have enough ability where we can actually draw in a flag line. And so if we get some testing back down here at the 8 or around there, that would provide us an opportunity where that would be a potential entry point. But again, if the market goes south, the flip side of this is we have a low volume push up to the 50-day moving average, and that you can interpret that as being a bearish signal or an opportunity to get short. Because overall, we still have this large, huge downtrend on QIE. Okay. Monster was dropping, if I'm not mistaken. Yeah, it's just kind of doing a little bit of sideways move here. And this can be looked at as either being good or bad. It's holding up exceptionally well with the market, and we have not seen a huge sell-off, so that's only about $5 off of a $140 stock. The interesting thing is, oh wow, the volume on Monster has picked up where its average is over 900,000, because there was a period where it was way down, about less than 500,000. But we've got three good above average, slightly above average selling days. So is that predicting I'm going to continue to fall? But right now we're just driving straight across in a lateral consolidation. I'm going to switch back to the. No, I'm not. Okay, Monster and AMBA. AMBA, we get some negative divergence on AMBA. As you can see here, look what's going on. We've got TSI negative, momentum negative, weekly negative, negative. So is this a topping action for AMBA? We don't know, because at this particular point, but it has held up well in the initial part of last week's market pullback, and it had a really nice rebound. But is it time where AMBA is going to be rolling over? We don't know. But it's again, if you're already in it, clearly you need to start planning a protection plan if the market is going to roll. Dorothy asked a question on AMBA. Does it have a good enough range to be interesting? It is back on the IBD 50. Well, the AMBA's been on the IBD 50 as the #1 stock for several weeks now. Good following. It's good trading following the 8-day. Yeah, I mean, every time it's gone down and broached the 8-day, it's bounced back 20 here. And so, yeah, AMBA's a really good, good-looking stock for longer term if it holds up well. But right now, it's looking like, hey, it may be time to take a rest. But we'll see. We'll see what happens here. Pay attention to what it does at the 8-day. If it breaks this level, the 72.87 or 72.53 level, that would tell it, and stays below it, closes below it, that would do that. That would tell us that, okay, it's taking some profit off the table. Let's see what else you got here. Gino. I may not get to all your Gino, because we've got several other folks who are also want one. LCI. Again, trying to make up its mind. Doji yesterday, closing just below the 8. And so are we going to get a complete retest back down here to 60 and then a rebound? We've got negative divergence on the true strength indicator. We've got negative divergence on the momentum. And it looks as if on a, this is where I'm talking about, sometimes I'll mention that the charts are out of sync. here we look like we're getting ready on the true strength indicator for a rebound. This is on the daily chart. Well, over here on a weekly chart, it's looking like we're getting ready to roll over and become negative. So, in order of importance, the weekly is stronger and typically more. Pay attention to the clues there more than the clues here on the daily, and the daily greater than the clues on the weekly. On the intraday. So it's the pecking order of the strength of signals. Yeah, Aaron, if you're a Thinkorswim trader, I can send you the link that will provide you the my chart setups. Let's see. UCO we talked about. BRZU. Brazil. Okay. Well, it's been in a downtrend and continues in a downtrend. It looks like it may be trying to bottom here. Looks like it's got okay volume. I had heard reports that the economy in Brazil was getting better, but I don't specifically follow the foreign markets in the ETFs for the foreign markets. EDC, emerging market bulls. One of our guys who joins us from India, he was talking about the Indian stock market is looks like it's rallying, and so again the emerging markets certainly you got a lot of volume. You can see. I'm going to show you one thing here. See these big gaps. This is telling us that we have a lot of it's telling us that we have a lot of gaps, but it's also telling us that this is related to a foreign exchange like the ADRs and those kind of stuff. You'll see all these huge gaps in them, and that's due to the ADRs trading overseas, and sometimes there's a gap between the opens and the closes, and so that's what gives you an indication. When you see a chart that looks like this, you can almost bet that it is a foreign type stock. Yeah, Gino, if you send me an email on that, I will, as a reminder, I will make sure I send you that setup. Appreciate it. So EDC. I'm running down here. George likes Twitter. And yeah, George, Twitter is on my list to watch also. The one thing that has just recently happened with Twitter, I understand that they came out and they're going to be making starting to offer more stock. And if that would come up. And so it may take a while. It's had a breakout that is struggling to maintain itself. And so that may be something where it's in the process of digesting those additional. Yeah, can everybody still hear me? Hello? Okay, thanks. So maybe an issue of it digesting those additional stocks. Yeah, that's what I thought also. There must be somebody, I don't know. It seems to be okay now. And the windy background was not me. Is it better now? Yes, okay. So yeah, Twitter. It's trying to decide what it's going to do. Is it going to just maintain itself and drive sideways as it digests those extra shares? Or is it going to pull back a little bit more? So the sideways move, I'm watching Twitter and just to see what it's going to do. And I like it to the long side. It's got a good story. Let's see what else we got here. UA. Susan, I'm watching UA. I'm liking, there we go, come on. I was going to say I'm liking UA. It's got a real nice pullback going on here. You know, it's again like the other, a lot of the other stocks. We're seeing this a lot here, where the weekly charts are telling us that we may be getting ready for a more intense pullback. The daily charts are telling us that, you know, hey, I may be bouncing back up to these trend lines here that are causing the flag. Intraday chart looking like it wants to go down, but there's just a lot of mixed signals going on out there. I want to share, and if I didn't get to, Dan's got Amazon. Amazon is it still is an amazing company, even though it's been you know, out there for quite a while, quite a long time. Amazon still remains to be a you know, a power player, and if the there we go. It is trying to determine, you know, Dan, you've got this basically this nice, you've got a and if I can draw it. Yeah, what's happening, guys, is my internet connection is going in and out. There we go. You've got basically a support area there, and it's going to make it up its mind. It's either going to break back above the resistance area at 380, but then you got more resistance up at 388, or it's going to drop below this, but then it'll find support at the 50-day moving average. If it breaks that, we're probably going to go down and test the this original gap up, which is down in this area here. And this indication here with the momentum is showing us that there is a lack of momentum, and when this squeeze goes on like this, it eventually is resolved either to the upside or the downside, with typically, so, you know, some really good power. And you had Adobe. And then I will share 1, 2, 3 stocks with you that caught my eye on my first initial glance. And so here we go. Here comes Adobe. Adobe's an initial part of a short-term downtrend, but overall kind of a sideways move. Came down here to support, made a nice bounce. Looks like it's trying to right itself here, and so it will be definitely market related, because if we, you know, with the new high in place up here, 80-ish. Weeklies look like they're approaching a point where it would like to turn over. The move this week resulted in the momentum going back up, but right now, this is where I'll be watching the TSI, Dan, is if the TSI gets up here close to the 100, or correction, the 0 line, that is kind of a break, you know, make it or break it time frame, because a lot of times if we don't, you know, if we put in another lower high, and this is in this area, I'll be looking for some reversal candles in here to move back down. Positives on the stock is, yeah, the volume was nice. You know, it looks to be increasing, and it actually had good volume for the upside on Friday. And here's a couple of stocks that I'll be watching and writing more about this weekend. INCY. INCY is finding support here about the 87 level, and it's looking like on a weekly chart, on a daily chart, looking like it's ready to move back up. But we would have this resistance trend that it could bounce. Again, negative side on it is we've got the 8-day moving over, the 20-day moving over, and so. But I'd be looking for somewhere between 85, the 50-day moving average. So this is looking interesting. It's not ready to buy yet, but that is a hammer at support. Downside. This URI, this is United Rentals, is looking really good for a potential downside move. It's got earnings. Recognize it has earnings coming up on the 15th of April, but it's come right up to the 50-day moving average. Last time it did that, it went sideways for a few days and then broke back down. And it'll be about a $5 drop to this support, and if that fails, we could be all the way back down here at 81. And so a couple other stocks to the upside that I'm watching are Mobley, MBLY. It's kind of in the Kihu type of position, maybe a little bit better because we have broken up. But Mobley, if the markets turn around, this is looking really good. We found support of the 50 and could have some really nice upside. If that support holds there, if that support doesn't hold, then we're probably looking for a new support down here at about 38, $2 from there. But this buying that took place over here is not the everyday, average trader. This is institutions buying into Mobileye, excuse me. And so that's, if that is in fact the case, they don't like to admit they're wrong, so they may step in and support this one. This is really a good one to be taking a look at. So, folks, we are at the end of an hour. I would like to say thank you very much for joining us. Have a very good, whatever your plans are for this weekend. My prayer for you is that you will have a blessed Easter Sunday. So have an awesome Easter, and folks, we'll see you next week. And those of you who are a Bay Area moneymaker, we'll see you tomorrow at the BAM. Bless you guys.